On today's episode, I'm going to be talking about the 3 asset classes that are being ignored right now and why you should be looking at opportunity. You absolutely shouldn't be looking at certainty in these times. We're going to get stuck into the episode right now. Hey, it's Troy Harris here. Let's start with what's making headlines this week. Now, markets are bracing as central banks signal rates may stay higher for longer. Now, this really puts us in a sticky position when it comes to inflation. Now, most people hear, the same old thing, same story, different week. But what this actually tells you for this week, if you understand how money moves, is that the pressure is continuing to build in the system. And when the pressure builds, money really starts to move. So today, I want to break down what's happening in Bitcoin, gold, and the broader market, and what you should actually be paying attention to right now. Now, the past week, we saw the dominant theme that has been persistence. Inflation is sticking around longer than expected. Growth is slowing in key areas, and central banks, they're shifting their tone. Instead of talking about easing, they're now preparing markets for lighter and tighter conditions to stay in place longer. Now, this creates a very specific type of environment. Less liquidity, more pressure, more volatility under the surface. And historically, those environments don't stay stable forever. They eventually force something to shift and something to move. That's why I want to talk about my most favorite subject, which is Bitcoin. Now, Bitcoin's currently sitting around 73,000 US dollars. Now, on the surface, it looks like it's just moving sideways, right? But this is where most people misread the market, like I said last week, because sideways movements at higher levels, that is often when accumulation's actually happening, not weakness. Now, this part of the cycle, it is the best time to be doing that. There's still strong underlying conditions there that's got a lot more for us to build from within this market. Institutional interest, it hasn't disappeared, and the long-term narrative continues to strengthen. In a world where trust in traditional systems is being questioned, Bitcoin, as always, becomes more relevant, not less. So I feel the longer Bitcoin feels quiet at these high levels, the more aggressive the next move tends to be. And that's why I'm always bullish on accumulating Bitcoin. Now, let's talk about gold. Gold's trading at the moment, it's been fairly steady. And again, it's doing exactly what it's designed to do. It's holding value, it's staying consistent, it's quietly strengthening. Meanwhile, central banks continue to accumulate gold. This will consistently and continually happen. And that's a signal worth paying attention to because they're not reacting to short-term moves. That's the big thing here, guys. We can't react to short-term moves. Banks are positioning themselves for long-term uncertainty. Now, gold, as I always say, it's not exciting, but it is absolutely dependable. And in uncertain environments like we're experiencing right now, that really matters. Gold doesn't spike to prove its value. It holds already while everything around it proves its weakness, as we're consistently seeing with the dollar. Now, when we zoom out and what this means for macro markets overall, in my opinion, we are clearly seeing a transition phase. Liquidity is tightening, risk is building beneath the surface, and capital becoming more selective. Now, where is that actual capital going? Well, it's flowing into assets that hold value. As I always say, you need to have it in assets that hold value, operating outside traditional systems and having long-term credibility. And that is why I am so bullish on Bitcoin. But gold, as always, will always hold that strength as well. Now, this isn't random. It is positioning for the long term. The biggest mistake right now is not volatility. It's sitting on the sidelines waiting for certainty, because if you're looking for certainty in these times, you will absolutely not find it. Now, here's one thing that I'd personally be watching very closely right now. Periods like this, where markets are consolidating and sentiment is mixed, are often where the best opportunities are quietly building. Not when everything is moving fast. We want to be accumulating now. But when things feel slow like they are now, that is when the smart money accumulates. And that is what you should be doing, in my opinion, as well. So rather than asking what is about to explode, a better question, in my opinion, is what is currently being ignored but quietly strengthening, hence playing into Bitcoin and gold. It puts you ahead of most investors in just thinking of that one thing alone, thinking about accumulation. So the takeaway from this week, I believe you just can't get too caught up into reacting to the noise. Don't wait for everything to feel clear. Start focusing on position. Start focusing on where the capital is flowing, where trust is moving, and where the long-term trends are heading, because that is where real wealth is built. Now, each week, I'll keep breaking this down as best as I can for you all as we head through these choppy waters. So hopefully you can stay ahead and not behind. And if you want to go deeper, if you want to understand exactly how to position yourself in markets like this, make sure you like and subscribe to everything we're doing here. And I hope to see you again next week.